Well, computer and software shares have slumped to their lowest valuations in 2 decades, although the NASDAQ is about even in today's session. What kinds of opportunities are there in the tech sector right now? Investors say a lot. Joining us now is David Eiswert. He's a portfolio manager with Rowe Price, where he oversees the technology fund with total assets of about $283 million. Last year in 2009, the fund outperformed about 90% of its peers. So, David, this has been a drumbeat of investors for a while that technology stocks were attractive. Is it going to be the valuations here being at these levels that is finally going to get more folks in?
Yeah, hi, Julie. I think what investors are really focusing on now is a deceleration in the second half. And so there's much less focus on what companies are worth and much more on the idea that business will slow year over year as we move into the second half. Obviously, the second half of last year is when things really recovered. That pattern of kind of trying to play accelerating and decelerating growth was a real driver in the last 10 years when looking at tech stocks. But during that period, I think to your point, tech stocks were significantly had significant higher multiples, were valued more richly. We've entered a period of time where you're looking at sort of historically low valuations for tech stocks. So we don't think that valuation alone is going to drive these companies, but we do think that there are a couple key factors to look at when you think about tech stocks right now. One is the amount of cash, which would allow stock buybacks or acquisitions. Two, we think that people are underestimating Asia. The rise of the Asian consumer, Asian enterprise. Even though
China is slowing down.
China is slowing down from a property perspective, but if you look at what the Chinese government's really trying to do, we think they're trying to accelerate infrastructure to the West in China, and so you're seeing them allow strikes, and you're seeing wages rise on the East, and that's really trying to push companies towards the West. That development of that infrastructure is going to be very bullish. Chinese consumers, just think about a country where the standard of living or the net income, the income of the people it's doubling every 3 or 4 years. Their ability to consume products is going to increase dramatically. So it's not going to be a valuation catalyst, but we think actually business is okay, right? We think we've had yeah.
I want to go to the cash question, though, because it's interesting. Everybody brings this up, that tech companies are flush with cash. It's really fantastic. We had one of our editors from Bloomberg Business Week who wrote a recent commentary where he said, what good is all this cash when they're not doing anything with it? And that's sort of the case. We haven't seen that many acquisitions this year. We haven't seen the share buybacks that you're talking about announced. So when is that going to happen? When are shareholders going to start to get antsy about this?
Well, I think if you look at a company like Cisco, you have seen they've done about $8 billion in acquisitions this year. You saw SAP buy Sybase, so you have seen some acquisitions. I think that tech companies, are trying to figure out how to use their cash, because historically, I don't think they've ever seen their stocks valued like this, right? So I think they're weighing, do we want to make strategic acquisitions? Do we want to buy back our own stock? We saw Yahoo announce a few days ago they were going to buy back 15% of the company, right? So I think we're at the period of time where the valuations are so low that these companies are going to have to make decisions. One point I want to make, Julie, about tech, which I think is really important, is following the tech bubble and the crash, right? We really had 10 years where we haven't overinvested in tech. I think that's key. If you look at housing and trying to dig ourselves out of the housing crisis, the problem there is overinvestment. I don't think we have that in technology. So if you have these valuations and then not the overinvestment cycle that we've seen in other sectors, that really limits your downside. And I think that's what makes tech attractive.
David, just in about 20 seconds here, do you have one particular pick going into earnings season?
We think Qualcomm is a very attractive stock, and Qualcomm has kind of found itself locked out of the Apple food chain for a couple years as iPhone has taken share. But we think smartphones globally, the rise of Android as an operating system, we think Qualcomm fits very well into that ecosystem.